Well, speaking of consumer spending, the next stock that we're going to be watching is shares of Johnson & Johnson. They're actually lower this morning, even though the world's largest health products maker reported a 40% rise in first quarter earnings. My next guest covers J&J at Crystal Research Associates, where he is CEO and also co-founder. He's Jeff Kraws, joining me here in the studio. Jeff, great to have you with us. Let's start off with that. You know, the shares are down 1%. Why is that? They came out with better than expected results and boosted their forecast.
Well, they beat the street. They did. They came in at $1.26. Street was looking for $1.20. I think one of the main reasons that the stock is down is a lot of the gains are foreign exchange impacted. They did beat the street with some stronger than expected sales, but if you look at prescription sales were up 3.3%. If you take out the foreign exchange effect, they were actually down 0.6%. The company's being heavily impacted by generic sales, exposure, competition, and concerns over side effects. Procrit and Eprix, two of its anemia drugs, were down 23%. Duragesic, its new pain patch, is seeing a lot of competition. It was down 23%. So
whatever benefit that you're seeing right now is just temporary.
It's a temporary benefit, and there are concerns over a lot of the products which are coming increasingly under competition or have generic exposure. Medical devices were up single-digit percentages. This company is a company that benefits by having breadth, and by having breadth, it has greater diversity, and it has an ability to ward off a lot of single negative elements.
I mean, let's take some of those elements you were talking about before, you know, generics. Are they doing enough to counter this?
Well, they are trying to. They're spending several $billions in the research and development pipeline, and a lot of that is going to be coming from the Pfizer consumers business that they acquired. That actually cash cow business, which does several $billions in gums and mints, is going to be very critical, especially with the economy being weak, to be able to fund that continued research and development. Medical devices were doing good. They were up single-digit percentages, and I would expect that continued sales of new pharmaceutical products are going to help drive their earnings forward.
What about consumer products? Is that a bright spot at all for the company?
Consumer products is a bright spot. It's one of the elements that pharmaceutical companies always have peaks and valleys in their flow of pharmaceuticals due to FDA timing issues, products not coming out as fast as you would like. So having that strong consumer products business gives them one of the strongest cash flow positions in the industry to be able to fund future development expenses.
But isn't that the most sensitive, of course, to a downturn? It
is, but people tend to still chew their gums and mints even during a downturn. So
hard to keep that habit from dying, right?
It is. It is.
Okay, the price right now at $65. Would you be buying at this level, or are you waiting for a bigger pullback?
I'd be waiting for a bigger pullback. I think the place is down right now. Own a basket of stocks. We certainly would be owning Pfizer in this area, this price level. We'd be owning Novartis because of a huge, not only a huge pipeline, but one of the largest generic businesses. And we'd be owning baskets of generic companies. Right now, you're seeing that 67% of all prescriptions written are generic, but it represents only about 20% of the dollars spent on prescription drugs. And recently, we've seen the news that Medicaid and Medicare and some of the prescription plans are charging much higher copays. So you're going to continue to see the push over to generics. And our favorite companies on the generic front would include Bayer, Mylan, and Teva.
So you're staying away from J&J right now?
I would stay away from J&J right now until all this flushes out. I think that much more attractive companies right now would be Pfizer or Novartis.
Okay, very quickly, I think we've got a little less than a minute. Restructuring, how's that going on right now at J&J?
Restructuring is going on quite well. It's a very good point to bring up. They are implementing a significant cost savings plan. They're cutting left and right as they try and integrate a lot of these businesses that have been recently acquired. And people, I think, often forget that they do have one of the biggest biotechnology companies with their Centocor acquisition in the world. So they will continue to restructure and they'll continue to gain cost efficiencies, but you can only pare that down so far. The reason to own J&J is the diversity, and the reason to own J&J is the pipeline of the future. Right now, there's concerns over the generics, the exposure that they have to them, as well as increasing competition. Their bright spot was Remicade up 37%, and Topamax up as well. But you have to remember Risperdal, which is one of their largest drugs. As a matter of fact, it was their largest drug, was actually down 7% in the quarter. So more cost cutting, but I think that there's other pharmaceutical companies you could own for the upside.
Okay, thanks so much, Jeff, for that analysis. That was great. That was Jeff Kraws, Crystal Research Associates CEO and also co-founder.